Revenue recognition is a very important rule. It tells us when to record revenues, and when you record revenues is in the periods that revenue is earned, and that's going to be regardless of whether the cash has been collected. So we're going to see here that as a result of that, you can earn without having collected. So what makes something earned? Well, the customer must have received the good or the service. So you must have done your side of the deal, i.e. delivered the good or performed the service. And you also have to be reasonably assured that you will get the money if you haven't gotten it at the time you're providing the service or delivering the goods. Now, because of this revenue recognition principle and this not requiring the collection of cash to record revenues, what's going to happen is that your revenue on your income statement won't equal the cash collected from customers on the statement of cash flows. That statement of cash flows represents the cash that came in, but we've seen here that the revenue recognition says you can earn revenue even though you haven't collected the cash yet. Well, what's good is that we have not just an income statement to show us what was earned or the statement of cash flows to show us what was collected from customers. We've got the balance sheet, and it's going to explain why this does not equal this in any given period. What you'll see on the balance sheet would be something like accounts receivable. Accounts receivable is an asset that's going to be on your records or on your balance sheet because revenues have been earned but not yet collected. So we're going to have recorded revenues. We don't have the cash. Instead, we have this other asset called accounts receivable. Now, what can also happen though is we might get the cash first and then earn it later. If that's the case, you'll have unearned revenue on your balance sheet. Unearned revenue is a liability, and represents the amount of cash you've collected in advance that you haven't earned yet. So again, to summarize, you record revenues when earned, not necessarily when the cash is collected. So when doing any of these homework problems, you want to always ask yourself, did the company deliver the good or perform the service? You can only record revenues if that is the case. You don't ask yourself, did the company get cash? Okay, hopefully that helps.